A breakout's a pretty common price pattern, and they're pretty frequent as well in the market. And they occur at enough frequency that there are breakout traders who only look for that type of price action. So think about this. Where does a trend start? It starts on the breakout of consolidation. So knowing what a false breakout looks like is pretty vital. And while I've never really seen the stats, the majority are false breakouts where price looks like it's set to run, but then it does the opposite. And if you're a breakout trader, you got to know what a false breakout looks like, so you're not just hanging on to a trade that's about to rip against you. The breakout trading is a popular method of trading because if you can get a breakout and it turns into a trend, you've effectively found the top or the bottom of what could be a long-term trend direction. And potential breakouts are not too hard to find either. Find a trending market, look for pullbacks and then a break in the same direction of the high or low pivot. Look for consolidation, like a range, and look for price to take out the high or the low. You can look for a trading indicator such as a moving average to be, quote, holding price. Use a higher time frame like a daily chart, and that can filter out some of the noise so you can see price extremes more clear. But false breakouts can cost you. And we know that many traders have no idea about risk management. They put too big a position size on. When the breakout fails, their trading account takes a hit and their equity curve can take a dive. So breakouts fail, but think about what can happen if you catch the right breakout. Think of Forex, for example. Currency trading is highly influenced by interest rates, the health of the economy, and even the words of an elected official. This chart here shows a decline of over 2,100 pips, and the red box indicates where it all began, a successful breakout. Breakout traders who know what to look for to signify a false breakout entered into this move and caught a 14% move. And depending on how they managed their risk, this could have easily made up for any trading losses that they took during the false breakouts that happened. False breakouts are a normal part of trading, but there are ways that you can avoid getting caught, or at least mitigate any loss, if you know the type of price action to look for. And we all know what a successful breakout looks like. Just look at this chart here. It's knowing what to look for to show you the breakout that you're taking is about to fail. Now that's more important. So if you're thinking about trading breakouts, the first thing you should know is what sets up the potential for a strong one. And for that, we just have to look at the price action and the structure. As price continues to hit up against resistance, you notice that price is making higher lows into resistance, indicating an accumulation. This tells you that buyers are willing to pay higher prices in this market, even as price doesn't make new highs. The chances for a successful breakout increase when players that can actually put in these higher pivot lows are looking in the same direction as the potential breakout. Another really great pattern is when you get a consolidation right below or above for support. This is actually a really great place to attempt a position before the breakout, especially if you see a failure test of lows. In the case of this, we're looking for breakout longs. And if you're thinking of positioning inside this smaller price range, you may not get price tipping its hand with pokes below and recovering back inside the range. You may even see a smaller range inside of this range. And the point is, sometimes you just have to get the position on, set your stop, and let things play out as they're going to play out. Once a breakout occurs, a pullback is not a bad thing if you're seeing a lazy pullback in price. If you're already long using a trading pattern we've talked about, seeing this type of action should not alarm you. In fact, pulling back below this former resistance does not invalidate the breakout, which is why the textbook version of your stop loss, which is just below the former resistance here, it's wrong. It ignores the evolution of price. If you're a breakout trader who waits for the breakout and trades the pullback, well, you're not actually trading the breakout. You're trading a pullback in price. And that looks like semantics. It's not, especially if you're using breakout trading rules for pullback trades. Each pattern's different and comes with their own set of complications. And there are other variations of this pattern, but for signs of a good breakout, you want to see accumulation of some sort, some failure tests of lows as well, or the highs, and a lazy pullback. And it's not going to guarantee the breakout won't eventually fail, but it does set certain parameters on how you're trading this pattern. With that, you can set up rules surrounding your stops and your targets that will help you stay consistent. Now, the obvious sign that the breakout's failing is that there's no follow through once price is broken the resistance or the support zone. Once is subjective. Follow through can happen a few bars later. Let me correct that. It's the obvious sign to a perfect breakout failing. Having consolidations after the breakout's not a bad thing as long as we are not seeing hard moves against the breakout direction. This shows price shooting up from support right through resistance. We have no signs of accumulation there, and in fact, we may have seen much of that potential energy of the breakout erased as price rockets from the bottom after it cleared out the previous accumulation that was occurring in the smaller trading range. When I see this type of action, I'm on alert that trading the actual breakout is not possible. A breakout failure is pending, and I'll have to look for the nature of the pullback if I'm interested in a long position. And while I don't have reams of stats showing this is a breakout failure waiting to happen, my experience and the normal evolution of price has shown that at least a pullback is coming. Oftentimes, you will see many technical indicators, depending on your look back period, start heading into overbought territory. This appears similar to the last example and is especially relevant if the resistance level was actually put in place after a strong thrust up in price. And if you think of what makes a good pullback as being a strong impulse leg, this resistance here is actually formed at the pivot level of the strong impulse leg. With price closing up and over resistance, but then charging back down, this is not a good sign, and it points to a false breakout instead of a successful one. And this pattern may not lead to a complete change to a downtrend, but it does put the uptrend potential in jeopardy at this time. So here, everything looks good for the breakout. We've got higher lows into resistance, consolidation under the level, strong breakout with 3 bars of a lazy pullback, which, if you're holding longs, that's not a bad sign. And that's where it ends, though. A strong momentum move against this breakout's not a good sign. If you remember earlier, we talked about the pullback after a breakout being an actual pullback trade. And here we have a failed pullback because you don't want to see a strong move in the direction of the pullback, the corrective leg. When a breakout fails, there can be the opportunity for a trade as long as you keep expectations in check. Thinking that you're catching a major trend change and then attempting to hold one when the price tells you different, that's a mistake. Shoot for smaller targets when trading a false breakout and use some of the patterns that we just talked about. Price broke above, tested highs, and then closed below former resistance. If that happens, look to trade a break of the reversal candlestick with a stop at the extreme. Price broke strongly against resistance level breakout in our examples. Well, think of what makes a good pullback, a strong impulse leg, and now look to trade the pullback from the failure. Knowing what a potential failure looks like when trading a breakout is a must. You have to strip away all the hope from your trading and just listen to what the price is telling you.